Hi everyone, welcome to today's video. So on today's video, I'm going to speak about Yes Bank. Should you be buying the bank? Because a lot of big investors, example Carlyle Group, is investing heavily into this bank. Or should you be selling this bank because there are other big players who currently hold equity in it? A classic case in point is State Bank of India. It holds share of Yes Bank, and the statement has come out by their chairman saying that, hey, you know what, we might sell our equity in Yes Bank. So I'm going to do a deep dive into Yes Bank stock and we'll talk about whether or not I will be taking positions into it or not taking positions into it, and what is it that you should also be doing. I'll explain this entire topic in 5 simple, easy to understand points. But let me give you a very quick disclaimer that Yes Bank is a very dangerous stock. You should only trade in these type of stocks or consider to invest in these type of stocks by understanding the risk appetite. So this is a clear message that I'm putting out. In case you want to do slightly less risk investing, then consider checking out some of my favorite small cases. I'm linking it in the description and the pinned comment box. You can go and check it out. Those are still more sensible if you are a beginner or an intermediate level player in the stock market. For the rest, let us understand the entire video. Maybe you will get some clues as to how you should be taking positions in Yes Bank, if at all. So first and foremost, let us quickly understand the history of Yes Bank. So Yes Bank was started somewhere in the year 2004 and it was run by Rana Kapoor and one of his associates. Unfortunately, that associate lost his life in 2008, and post that, Rana Kapoor became the CEO of Yes Bank. From the period 2008 to 2014, Yes Bank saw a massive growth. One of their key strategies was to give out higher interest rate. So they attracted a lot of customer deposit. And over time, its valuation rose to 1.1 trillion rupees. And this is the jump in the stock price. And you can clearly see it was one of the stock market's absolute favorite stocks during that era. But in 2014, RBI decided to clean up the bank books. There was a lot of issues that were going on. This was the same era when Nirav Modi case came into the limelight. There was DHFL crisis that came into the limelight, and a lot of NBFCs underwent stressed asset situation. So the RBI decided to clean up the books of different banks, because the way this entire financial industry works is that banks actually lend money to each other, and a lot of banks also lend money to NBFCs. So if there are stressed asset situations with any of the banks, then it can have significant negative impacts on all the other banks. So RBI instructed a lot of banks to look into its asset books and outline the asset quality it had. Now in 2014, the NPA or the declared NPA by the bank was roughly around 0.31%. But as RBI started looking into Yes Bank's asset books, it quickly realized that, you know what, there is something off with Yes Bank. It was giving a lot of corporate loans, and many of these loans were extremely high risk loans. They had lended out to a lot of parties. For example, DHFL, they have lended out to large big businesses. In fact, let me show you the chart here. It will give you more clarity. So here is the historic loan book of Yes Bank, and you can see that their corporate lending was roughly 68%, and they have been actively trying to bring this down. Now you might have a natural question that, hey, why is it so risky to lend out to corporates? Because the majority of the defaults that happens through corporate. What Yes Bank was doing was that it was offering super high interest rate to attract a lot of deposits from retail customers, and then using that money to give out more and more corporate loans. In fact, a lot of irregularities were covered, and I'm quoting from CBI's chart sheet. What ended up happening there was that Rana Kapoor worked in cahoots with DHFL. So the word of the day today is cahoots. Let me know what does that mean. So Rana Kapoor worked in conjunction or in cahoots with DHFL, and DHFL defaulted on the loan. But when the back study was done, it was very evident that Rana Kapoor, through Yes Bank, diverted a lot of corporate loans to DHFL. DHFL instead made certain investments in Rana Kapoor's daughters' companies, and that is how this entire nexus was operating. Now, once these type of irregularities were uncovered, it became like a political issue, and a lot of heat was thrown in the central government by a lot of news channels. And this led to a problem called as the bank run problem. So what exactly is the bank run problem? Bank run problem happens is that if you have deposits in certain banks, and if you feel that, hey, this bank has become very risky, let me withdraw my money. Now what ended up happening was that a lot of people lined outside Yes Bank to close their account and withdraw all their money. But if such a problem is witnessed by any bank, they do not have enough liquidity. So liquidity simply means that, let's imagine that there is 1 crore entire deposit that the bank is supposed to pay out to its creditors. Who are the creditors? People like you and me who might have our accounts with Yes Bank. Now, the total amount of money that Yes Bank should be keeping on its book was 1 crore rupee, but they are not keeping that entire money. This flexibility is allowed to all the banks. Now, why is that the case? Because it is assumed that, you know what, at one point in time, not all the depositors are going to run to the bank and demand that 1 crore rupee that the bank is supposed to pay them. So when such a situation arises that people start running to the bank to close their account and withdraw their money, and that problem is called as a bank run problem, and it happened with Yes Bank. And here is the stock price fall that happened because of that. Now there is another concept that you need to be familiar with, and that concept is called as interlending of loans between banks. So for example, SBI give loans to ICICI Bank, ICICI give it to HDFC Bank, so on and so forth, and the chain continues. Now, if one of the large banks has this bank run problem, it can impact a lot of other banks. Similar situation played out in 2008, and that is where a lot of banks in America went under and they had to be recapitalized. So recapitalized means that the capital infusion came from the government in those American banks. Similar situation started to happen with Yes Bank, that there was a bank run problem and the government feared that, you know what, this bank might actually go under. So what did they do? And this brings us to point number 2, that they created a restructuring or a revival plan for Yes Bank. So a large part of this revival plan took place in the year 2020, and here government came out with several mandates, and I'm going to talk about 2-3 key mandates here. So the first key thing that the government did was that they imposed a moratorium period. So moratorium period simply meant that, hey, if you have money lying in that bank account, you can only withdraw a certain bit of money. Something similar happened during the demonetization game. So this was the first step taken by the government in order to prevent that bank run situation. Second key thing, the government asked a lot of other banks, for example, ICICI Bank, Axis Bank, SBI, to purchase equity of Yes Bank at 10 rupees and infuse capital into that bank. This is a very important point, and that price of 10 rupees is very, very important. It will help you understand whether you should be buying Yes Bank or not. But please understand for the time being that a lot of large cap banks, for example, Axis Bank, ICICI, SBI, they all purchased equities of Yes Bank. Then came the third rule that, okay, great, you have purchased equity, but we are not giving you this equity for 10 rupees. You have to wait, and there is a certain waiting period. And what that waiting period is, that if you are an investor, you have to hold your shares for at least 3 years. How much shares? 75% of those shares. Yes, there were slight exceptions to these rules, but broadly, this is what the math that followed. So this is the entire history of the Yes Bank crisis. I hope you understood the historic context, and understanding this historic context is really, really important, because let us now revisit the investment figures. I will take you to Yes Bank shareholding pattern, and I will click on this DII, and what you will see is that if you compare the March 2020 quarter, when the asset restructuring happened for Yes Bank, SBI was holding roughly 48.21% equity. On the other hand, if you take ICICI Bank, they have reduced from 7.97 to 2.99. If you take a look at Axis Bank, they have reduced from 4.78 to 1.96. If you take a look at IDFC First Bank, it has reduced from 1.67 to 1.15. Now you might say that, okay, this looks like a very worrying sign, because SBI, Axis Bank, ICICI, everyone is cutting their holding, and on the flip side, the retail investors are buying this bank more and more and more. So is there something fishy that is going on? So the answer could be a yes and a no, and let me debate that in third point. Now, any big investor might sell their stake for a wide variety of reasons. It is very difficult for us as retail investors to speculate why a big investor like SBI or ICICI is selling their stake in Yes Bank. Few of the prominent reasons would be that, hey, they got to buy the share at 10 rupees a piece. Now the stock price has climbed up, so they would have booked their profit. So very valid reason. Second is that they might find better requirement of that money, so they would have sold their stake there. Third is that they might want less exposure to their banking sector, given the fact that they themselves are banks. Fourth would be that there might be shareholder pressure and whatnot. So in this context, the SBI chairman recently gave out a statement, and I'm reading it from here, quite okay, with lowering stake in Yes Bank to 26% by March 2023. Now, why is this 26% important? Because this is the absolute lowest limit that SBI needs to maintain till March 2023. After that, they can exit even more. And the SBI chairman is saying that we are completely okay moving to the absolute lowest number of shares that we need to hold in Yes Bank. So that is what he's saying. Now you can draw your own inferences from this statement, but he has publicly announced that he is completely okay lowering his position in Yes Bank. So now comes the fourth point, and here you need to understand this point in two phases. So the first phase is up until March 2023. This is a very important date because this period ranges from March 2020 to 2023, and here is where the government had came out with specific mandate that hey, if you have purchased equity in Yes Bank, you can't exit majority of your stock before March of 2023. So let us quickly discuss what is likely to happen in Yes Bank up until March 2023, and the second phase would be beyond March 2023. So we have touched upon the fact that SBI might sell its positions further from 30% and lower it down to 26% in Yes Bank up until March 2023. So that will move the stock price definitely, because if a big investor exits the stock, that is not good for the stock. So this is the absolute short-term scenario that is likely to happen. Now, what is more likely to happen will take place post-March of 2023. Something similar happened with Zomato recently, that one of its largest investor, which is Uber, it exited Zomato stock and the stock fell quite aggressively. Post that, it has recovered. But the point that I'm trying to drive home is that if a big investor exits a prominent stock, then the price of that stock generally falls. This is part A. Part B is that 2023 March becomes a great opportunity for a lot of parties who have made a lot of money by buying Yes Bank at 10 rupees to sell those stocks post March 2023. So this is what I feel, and this is pure speculation. So I personally feel that up until March 2023, that Yes Bank is likely to give an up move. Then there might be a very big correction that might come into the stock post of March 2023. Why is that the case? Let me explain that on the next point. So in order to understand the short-term and the long-term prospects of the stock, you need to understand how the business will evolve from this point. And here the first key point that you need to understand is that certain new recent investors have come on board with Yes Bank. There are two prominent investors that have come up. So let us understand their viewpoint and let us see how much money they are investing. So the first investor is Carlyle. That is a very big private equity firm, and they are investing roughly 9,000 crore. They are roughly getting 370 crore worth of equity at 13.79 rupees per share. And right now the stock is trading roughly at 16 and a half. Now, if Carlyle Group is entering into this stock, then they are not entering it just to make like a 2 rupee profit on this stock. They would want the stock price to at least double from here. And this is the statement that they have issued. This comes from Sunil Kaul, who is the managing director. And what he is simply saying is that, hey, banking sector is going to go up. India, strong fundamentals, and Yes Bank has averted the crisis and they are doing wonderful good things as of now. And we have a lot of trust on the leadership. Now, the second investor is Advent International, and they have also given similar commentary. So first and foremost, you need to understand that at the time when SBI, Axis Bank, ICICI, all these banks were made to purchase Yes Bank's equity, Yes Bank was having very hard time in terms of raising investments from outside. Why was that the case? Because their loan book was very fragile state. They were not able to pass on the bad loans to anyone. Now, what they have done is that number one, they have been able to get new investors. That's part A. Part B, what they have been able to do is that they have been able to manage this stress asset situations. So recently they have acquired a 20% stake in JC Flowers Asset Reconstruction Company, and it has been able to hand over a lot of loans to this ARC. Now, what is the advantage, disadvantage of this ARC is an entirely new debate. But to cut the long story short, passing on your loans to ARC, it at least gives them a breather and it moves away from that NPA situation that the bank has on its book. So there are a lot of positive things that the bank is doing, and therefore we have investors like Carlyle Group, which is investing into this bank as of now. But here are a couple of other key worrying factors that remains with the bank. First and foremost, the banking industry competition has quite aggressively grown since 2014, which was the downfall period of Yes Bank, and it has just recently started recovering, so to say. A lot of space has been taken, especially by something like IDFC First Bank. So if I were to pick between IDFC First Bank and Yes Bank, I will personally put a lot more money in IDFC First Bank. In fact, I have already put a lot of money on IDFC First Bank. So this is the first key thing, that the competition from a long business perspective is still very, very high in the banking industry, and it has gone up, and IDFC First and banks similar to IDFC First has taken away a lot of market share and potential market share from Yes Bank. Second key long-term problem with Yes Bank is, and you can understand this from this chart, that still a large part of their loan is diverted to corporate books. They are still giving very high corporate loans. Retail investor faith is not that high with the bank. So it's a very high risk to assume that Yes Bank is on a turnaround journey. What is it that you and I should be doing as an investor? It really depends on your risk appetite. If you want to speculate, then please play as per the technicals up until March of 2023. This is the first piece of advice. If you're looking for long-term prospects, then you really need to ask, why are you going after Yes Bank and why not with something like IDFC First Bank? That is the second key question that will give you an answer whether or not you should be investing in it from a long-term perspective or not. And third and finally, if your viewpoint is that ab isme kya hi bura hoga, so we should just take a little bit of position, then again, there is nothing wrong with that understanding, because at least the complete negative side of the story has been thrashed to a certain extent. New investors are coming. There is a kind of a growth story that can be built from this particular perspective. But irrespective of what decision you take, please understand that this is a high risk stock. I hope you enjoyed this analysis and I will see you soon.